Hey everybody, welcome back to my channel. My name is Ben Wheeler. I'm a local realtor in Northwest Wisconsin. Today I am with Al Nelson from Cross Country Mortgage, and we're going to talk about just getting that pre-approval for a conventional loan if you're looking to purchase a home. So Al, I'll let you introduce yourself a little bit here.
Al Nelson, Cross Country Mortgage, located in Polk County or St. Croix Falls, Wisconsin. I've been working with Ben for quite a few years.
So I'm sure you get this a lot. When somebody wants to buy a home, what are the steps they should go through? And how much money do they have to have? Like down payment wise and stuff like that. I mean, do they need 20% down? What do you do with that?
That's a really great question. The main thing is, in this market especially, get your pre-approval letter, because the house could come on the market and be off tomorrow. So you want to get your pre-approval. Down payment, most people think you need a lot of money down. You really don't. We have as little, if you're a first-time home buyer, 3% down. If you're not a first-time home buyer with conventional loan, is a minimum of 5% down.
Okay.
You can do 5, 10, 15, 20. If you don't put down at least 20%, you will have mortgage insurance with that.
Okay.
And that's a whole nother subject, is mortgage insurance. But the more you put down, the less your mortgage insurance will be until you get to 20% down, then you don't have it.
Okay. So the more you put down is going to get around that mortgage insurance, the PMI, right?
Yep. Private mortgage insurance. Yep.
Okay. But you can still get a mortgage with 3% down.
3% down if you qualify for that. Yep.
What kind of qualifications do you need for a 3% down conventional loan?
Under the medium income is the big thing you need to be. A first-time home buyer or under the medium income for the county. Polk County, where Ben and I are sitting in here, I think it's about just over $70,000 to be under the medium income for the household income. It's actually not even household, it's who's ever on the loan. Maybe you qualify with one of the couple, if it's a couple. And if they're the only ones on the loan, we just look at that income for conventional loans.
Yep. Sure. I mean, what are the credit criteria when it comes to that style loan?
You know, we get the application, pull credit, verify the income, run it through automated underwriting. You can do a conventional loan down in the 600s, mid 600s.
Okay. So that's just credit rating of mid sixes.
Yep. The computer program tells us if you're going to be approved or not. Yeah.
And what kind of work history would you have to have for something like that?
2 years, but it doesn't have to be at the same job.
Okay.
Have to have a 2-year work history. Or if you graduated from college and you got a job, at least a 2-year degree, you got your degree and got a job in your field that you went to school for, then we just need a offer letter.
Okay. So you wouldn't even need necessarily the work history, because that college must count towards that work history.
Yeah. You have to get a job in the field you got your degree in. And you have to get your degree. You can't quit school and then without the work history.
With work history, does it have to all be like the same job, or to be in the same has to be the same field or anything?
It used to be that way. It's not that way anymore.
As long as you just have steady work history.
Correct. No more than a 6-month job gap and a 2-year work history or 2 years of school.
Sure. Yep. That's really good information to know. So when it comes to different loan styles, like conventional, there's USDA, there's FHA, there's VA, I think there's even a couple state programs out there. What do you see more first-time home buyers going towards? Or does it, whatever fits them in their situation?
It just depends on the app, the credit, the debt to income. We look at all that, and then I present the borrower with options if they have options. They might only have one option. Sometimes it's just FHA because credit's ding, debt to income's high, and FHA is the only option. FHA is a great loan, but the house has to be in pretty good working order for FHA. So
really the best thing to do if you are even like thinking of purchasing a home, you're getting out of that renting game of sorts, because you just don't, that's an unpredictable bill. You just don't know what your rent's going to be.
Correct.
I mean, really the best thing to do is to contact a local lender like Al and let them run through the options with you, you know, whether it's going to be FHA, USDA, conventional. Of course, if you are a vet, the VA program is
that's the best.
Awesome program. You know, if you just don't even know where to start, the best place to look is, you know, contact a local lender. If you ever need a recommendation on those, of course, you know, contact me directly. But there's Al. He's a very good local lender, and they'll kind of walk you through the steps of what you have to do and what you need to do to get that pre-approval. Because interestingly, I'm in an offer situation right now with a buyer. They were not pre-approved before we went to go see the house. And some agents will say, well, don't do that. But it always doesn't work out where they're going to fill out all the paperwork before that house comes on the market.
Yeah.
So now you're scrambling to get that stuff done so you can try to get something accepted. All the while, there might be another offer coming in and we could miss out. I mean, that is what very likely or could happen now because they just weren't ready.
Yeah.
You really got to be ready. The market has been competitive for a few years now. I mean, over 5 probably, but really the last 3 years, it's been very competitive to where you have to have that pre-approval, like it or not.
Yeah.
And a loan officer like Al will be able to guide you through what loan program to go forward with. If they have dinged credit, like you said, is there a way to kind of help with that too?
I do that, and I don't charge for that because we need to do if it takes 6 months, 12 months to help somebody fix their credit, we need to do a deal then anyway. And helping those people is, I get a great deal of satisfaction out of that.
Right. Because I mean, it really helps them move their position in life,
their financial
forward.
Future. Yeah.
Yeah. If it takes 6 months, 12 months. I mean, it's going to take as long as it takes, and they wouldn't know what to do if it wasn't for the guidance from,
Correct.
the people who know. So even if you have not perfect credit or whatever the situation might be, it's worth checking into things.
I can't tell you how many times somebody's been hesitant to walk into my office and they sit down and I'll pick their brain a little and ask them, well, what do you think your credit is? Yeah, I don't think I'm going to qualify. Yeah. And they do.
Sure.
That happens a lot.
And a lot of people, I'm sure, are being afraid to be told no.
Correct.
So they didn't even want to go through the motions because they don't want to be told no. But it might be no now, but it's not no forever.
Right.
Right?
Correct.
There are ways to fix credit, to plan how you're going to purchase that home.
Yeah, exactly.
Anything else you want to just add to that?
No, conventional loans, that's the Freddie Mac, Fannie Mae. It's a great option. That's what you have to do for investment properties, second homes and all that. But no, it's a great option, but it doesn't fit for everybody. But we have other options.
Great.
Yep.
All right. Well, thank you everybody for watching. Make sure you subscribe, like, and leave a comment, and take care.